Hello and welcome back to KD's Business Tips. Michael Lapide here in a short video talking about strategies to improve liquidity for small businesses. First of all, small businesses often worry about not having enough money or having enough money to pay bills, payroll, suppliers. Even if sales numbers are quite good, it's cash flow that we're really looking at a lot of times. We do need to know our sales, we need to know our income and expenses, but we really need to look at cash flow on more of a regular basis. Many business owners struggle, especially during the first few years of business, not because they're not selling enough, but because they don't have the liquidity or cash available when they need it. Let's be honest, right? Today's topic about liquidity, what it is, why it's important, how you can improve it. So liquidity refers to how quickly your business can get and access cash to meet its short-term obligations. How fast can you get that cash to meet the short-term obligations is a big part of liquidity, right? Bills, payroll, things like that. A business may have valuable assets, right? So you might have a bunch of land and buildings, but could still struggle financially and not have enough cash. Asset rich, cash poor. That can happen in an individual's life and it can happen in a business. This is why liquidity is one of the most important factors in determining the financial health of the business. So here are some common strategies to improve the liquidity. Number one, track cash flow regularly. I mentioned that at the beginning. Review your bank balances, your accounts receivable, your payables, upcoming expenses on a regular basis. Tracking your cash flow regularly will help you determine potential shortages before they happen. And the more you do this, the more you forecast forward and look at your regular cash flow, the better you're going to become at it and you'll be able to spot things. And eventually you're going to have reserves or access to capital for shortfalls. And also for capital, when you have excess, how are you going to manage that excess capital properly? Accelerate payments from customers is another thing you can do. Find ways, to get paid faster. Automate your invoicing. Provide convenient payment terms. Make sure that you follow up on the overdue accounts regularly. Maybe give them incentives to pay early. Things like that. Because the faster you get paid, the stronger your liquidity position is. Control expenses is the next one. I think we all know this one. Manage your cash outflows properly and effectively. Review expenses, determine if they're necessary, and find ways you can reduce them because small savings here and there add up to quite a bit. Also, negotiate better payment terms. Work with your vendors, your suppliers, because it's not just the income and the expense you have going out in the number, but it's the timing of when it comes in and when it goes out. That is the key to cash flow. So negotiate those better terms, right? Work with your vendors, your suppliers, and try to find if you can extend terms, make installment payment arrangements where possible, especially when cash flow is tight. Your cash flow becomes easier to manage if you have better payment terms. You can pay now, you can pay in 60 days. It's wonderful. Another one is to build a financial safety net. So prepare for potential shortfalls by having a cash reserve or establishing a business line of credit. I mentioned this already. So finding that way to get a safety net in place for low times. The best time to secure financing, unfortunately, is when your business is not in need of it. So when you want to get a line of credit, it's usually best to go for the line of credit or the loan when you don't need it, typically if you just need money and if you need capital. Now, if you're going for a loan for an asset, that's different. I'm talking about liquidity, capital, and having the reserves on hand. Going for a line of credit as an example. You should go when you don't really need it. So focus on improving the liquidity of your business by implementing these strategies. Remember, a business with strong liquidity is more flexible and will have greater ability to grow and seize opportunities and we be more valuable later down the road. Any questions? We'd love to hear from you. Post in the comments below and subscribe if you haven't to, and we'll see you in the next video.